the unequal distribution of U.S. stock market wealth. A stark calculation, the U.S. stock market is a primary driver of wealth, yet that wealth is heavily concentrated among the wealthiest Americans. This analysis explores what would happen if stock market holdings were distributed equally among all U.S. citizens, highlighting the extreme disparities in current ownership. The hypothetical: equal ownership as of mid-2025, the total value of the U.S. stock market is approximately $62.8 trillion. With a population of roughly 330 million, an equal distribution would grant each person approximately $190,300 in stock wealth. A family of 4 would hold $761,200. For context, this calculation includes everyone, from newborns to retirees, regardless of whether they currently invest. The reality: extreme concentration, the current distribution is drastically different. The bottom 50% of Americans, around 165 million people, collectively own just 1% of stock market wealth, averaging only $3,800 per person. The top 1%, comprising approximately 3.3 million individuals, controls nearly 50% of stock market wealth, translating to roughly $9.5 million per person. This means the wealthiest Americans hold over 250 times more stock wealth than those in the bottom half. The gap is not simply large, it is fundamental. Equal distribution would close a $186,500 wealth disparity for every person in the bottom 50%. Household breakdown: the middle class impact: the average U.S. household, 2.5 people, would receive roughly $475,750 under equal distribution. Yet middle and upper middle class households, the 50th to 90th wealth percentile, own only around 10% of the total stock wealth, about $47,576 per household. Even these households would see a significant increase in wealth under equal redistribution. Focus on working adults. A more realistic scenario, if the calculation focuses solely on working-age adults, 1864, roughly 205 million people, each would receive approximately $306,300, including retirees, 65 plus, roughly 56 million people, lowers that to $240,613, providing a substantial boost to retirement security beyond Social Security. However, these numbers still rely on the assumption that all Americans have equal access to investment opportunities, which is not the case. Important caveats: the fine print: the $62.8 trillion figure includes holdings by foreign investors, institutions, and private equity wealth not directly accessible to U.S. households. Total equity wealth, including private holdings, exceeds this amount. Furthermore, the calculation assumes universal participation, ignoring the barriers to entry for those lacking financial literacy, capital, or access to investment accounts. The larger point: wealth concentration and inequality, the extreme disparity in stock ownership, is a key driver of wealth inequality. The bottom 50% receives only a small fraction of market gains, while the top 1% captures the lion's share. This imbalance explains why rising stock markets do not translate into broad prosperity. Wealth flows upward, reinforcing existing inequalities. The current system concentrates wealth at the very top, leaving the vast majority with little to no equity ownership. This analysis underscores the need for policies that address wealth concentration and promote more equitable distribution of financial assets.